As the world of banking and finance in the Philippines continues to progress and develop to newer modes of delivery, digital specifically, unfortunately, scammers are also getting smarter, targeting major banks like BPI, BDO, Metrobank, and even the digital ones like GoTyme have been subject to phishing scams. And it's just so hard to imagine your hard earned money, you wake up one day and then your account is wiped out and you have no way of recovering that money. It's one of my worst fears, to be frank, but I don't want that to happen to myself, to you watching this video, or anyone in the Philippines. It's just an awful, awful thing. So to avoid that, today I'll show you a system called wealth layering that I use to protect my money from scammers and from myself. A quick personal story. 10 years ago, I was struggling to save money. I was losing track of things. I kept buying stuff that I didn't need. But everything changed when my wife and I decided to get married. One of the first things we did was to open a separate bank account to house our wedding funds. Now, I wasn't really thinking a lot about it that time, but it was a good principle to learn because one thing that I now understand about finances is borders create order. If you create financial borders between your money, it reduces the amount of chaos and confusion and mix up. And that's a common problem that people experience nowadays. Quick disclaimer, these ideas are from my personal experience and should not be treated as tailored financial advice for your specific situation. These are just experiences that have led me to good outcomes from my personal experience. And so if you find anything useful, use them, but do so at your own risk. All right, so let's get right into it. The analogy that I like to use to understand this wealth layering concept is a tree. Now, the first thing that I ask somebody else or even myself is to ask, can you please draw a tree for me? And then somebody draws a tree, right? But usually they only draw what they see on the surface. What they don't see are the roots underneath the tree. And that's just equally as much part of a tree as the surface level of what can be seen. So in the same kind of thinking, I like to think of building wealth as these layers of there's a top level, there's a surface level, a ground level, and an underground level. The deeper you go, the harder it is to liquidate or to touch that wealth. So this is how I like to think about it. And now I'll share with you the 6 layers. Layer number 1 is everyday spending and scam prevention. Today, I use only credit cards to interact with daily transactions, even online purchases. Why do I do this? The only reason is that I use it so that I can protect my money. Because if there are charges that are unauthorized, at least I can still contest. I can still give a call and say, I did not spend this money. Please block my card now. And the second thing is, a card has limits. If a debit card gets hacked or a debit account gets hacked, once the money is out, it's so hard to recover the money. But with credit cards, at least I can make a contest, and there's still some ground that I can fight, and some charges can be reversed even. So it doesn't necessarily have to be in my charge to me. And at the same time, another thing is I have a strategy wherein I have 3 to 5 credit cards and they have varying credit limits. So the riskier the purchase, meaning if it's an online purchase that I'm not 100% familiar with the site, but I need the item, for example. So with Amazon, Shopee, or any online shopping or any courses that I want to buy, for example, I use credit cards that have a very low credit limit. So in case it gets compromised, the risk is much lower and I can still contest it. So with larger purchases that I buy from the mall or groceries or gasoline or anything like that, I can use other credit cards that are a bit higher with the credit limit, but I only use them when it's a face-to-face interaction, meaning I can contest it, I can come back to and I can trace the spending if I need to. So this is the strategy that I use to kind of reduce the risk from day-to-day transactions that are more susceptible to fraud and scams, like things like that. Those are the entry points. The other thing is, I it's and it has to be reminded we have to be reminded not to click any links from text messages and from email blasts. Anything that comes into email that you did not ask for, do not click on any links, because that might very well be a phishing scam wherein they try to pretend to be a legit site and then capture your login details and then send you a fake OTP, and then they'll get it and then use it to change your password and everything, and that's where the whole nightmare happens. And we don't want that to happen to anyone here in the Philippines, not anymore. And as much as I help you to get smarter and not become a victim of this, I also would like to say that I think the deeper issue is, why do people believe that they can do this, get away with this, and it's okay to do this? I think that's a deeper problem that needs to be addressed in several levels, like from the family level, the government level, the church, the institutions around us. That we need to address it from that level. That doing something like this, which is stealing, literally, it's an evil thing to do. It's not okay. It's not okay to do it to your fellow man. Anyway, that's the first layer, which is everyday spending and scam protection. Now, before we dive deeper into the wealth layering strategy, I have a humble request, which is, if you like what you're hearing in this video, if you find it helpful, then please do like the video, subscribe if you want more, and share this video to somebody who you think might benefit from something like this. Now, back to the video. So layer 2 is the cash flow layer, wherein money comes in from your employment, for example, or your business, and then this is also where the money goes out. So if the first layer is where all the expenses are handled, wherein you're just using credit cards to do that, to reduce the risk, the second layer is where you take the money to pay for the credit that you're using every month. Obviously, you want to pay in full with your credit cards. You don't want to let the interest accrue, because that's going to work against you. But if you pay in full your monthly dues, then you're not going to accrue any interest from that. And anything else that needs cash from you, this is the only time I use my debit cards now, or when I need to withdraw some money. But if I need to pay for anything, I very rarely, if ever, now use my debit cards. I only use my credit cards for that. So as you can see, there's already a layer of protection there. So those are the first two layers. Now let's get a bit deeper. Layer 3, wherein I call this the high interest savings account layer, or this is where the emergency or the peace of mind fund is. So coming from your cash flow layer, you transfer a certain amount every month, any amount that makes sense, as long as you're building up this third layer as well. It greatly varies based on your income, on the amount of income that you're making monthly. If you're making way more than your needs, then you can definitely set aside more and put it in this layer. But this layer is even more rarely touched, because this is where funds are funneled in from the cash flow account. It's not deeply embedded yet, meaning I can get it if I really need to. I can get it instantly. But if it's not needed, then it just stays in there and it just accrues interest for me. You can spread it out across different banking institutions. You have GoTyme, you have Maya, you have CBank, you have Own Bank, and all these other digital banks. You don't want to put all your eggs in one basket. But to me, right now, the easiest one for me to use is GoTyme. Myself and my wife, we just put a little bit of money there to make sure that it's ready in case there's an emergency. There's a small emergency, we can handle it. Okay, now we're getting into the deeper layers. There's 3 more layers, guys. So the fourth layer is investment accounts and insurances, term insurance, VUL insurance. It depends on the horizon that you identify, but typically this layer is good for the next 5 to 10 years. Another thing that I forgot to mention for this layer is Pag-ibig MP2. If you want to explore that, then it will fit nicely into the horizon, and the principal is guaranteed, the dividends aren't, but based on the track record of Pag-ibig, is also another nice place to keep some of your money. You want to just distribute them intelligently without risking too much with just one institution, because you never know when one needs to take a break or something. You just want to be able to distribute that risk across different platforms. So some investment accounts that I recommend you check out would be COL Financial, Dragonfy. I use Manulife iFunds for UITFs. You can also use the UITF functions for your traditional banks, such as BDO and BPI. GCash also offers, or a mutual funds that you can invest in. There's a lot of platforms now that you can look into, but it's a bit harder to put in money into an investment account. It's also a bit harder to take it out, which actually works to your advantage if you want to protect your money from yourself, and also to launch it into the future with earning interest. All right, so that's layer number 4, your paper assets. If you notice it, it's all paper assets. Now, layer number 5 is where real estate and bigger insurance accounts come in. If you want to, it's quite deep already, because you're going into retirement planning. If, like, what I'm saying is, with real estate, is if you don't plan on using it as a business, if you don't plan on leasing the land, if you just want to buy some land, or like buy land and build a house on it, and then live on it for a long time, then that's probably gonna be good for a retirement purposes. Now, if you can't afford real estate right away, or you don't want to lock in your money with real estate, you can also explore some REITs, wherein it's a real estate investment trust fund that you can just put money in, and then kind of get a feel of getting monthly rental income sent back to you, and also appreciating the fund. It's kind of like having an actual property that you're renting out, but the capital is much lower to enter into a REIT fund. Some as low as 1,000 pesos, you can already buy into REITs. Now, layer 6 for me is the deepest layer, which is trust and estate planning. If you come to a point where you actually need to create a trust entity to manage all your assets, all your wealth, then, well, good job. Congratulations to you. Sometimes it just requires a simple will, just making sure that you are distributing your possessions to the next generation according to how you want it done, and the exact things that you want to do. There is an end to the work here on earth and the wealth building here on earth. There's life beyond it for the person who built the wealth, and there's also life beyond the person dying, which is for the people who are left behind. And it's worth you putting some energy and attention into thinking about, okay, what's next? When I die, what's gonna happen? What's next? And this is where your insurances, your St. Peter, all those final expenses, your critical illness, and I highly recommend that you have a degree of critical illness coverage, just to make sure that no matter what happens, you will be financially covered, whether it be in good health, in not so good health, or even in the time that you need to go. Everything is taken care of. So anyway, that's my quick run through for the wealth layering principles and ideas that I have so far, so to help myself be protected from scammers, from myself, and even for the future, giving me an understanding of where I want it to go, how I want to distribute it, and beyond that. If you found any of these helpful and you like it, then please do like the video, Subscribe if you want more, and again, share it to somebody if you feel like that person can benefit from these ideas. Thank you so much, guys, for hanging out today, and I'll see you in the next video.